Just on what to expect at the Open. We're joined now by Stan Shamu from IG in Melbourne. Stan, there, interesting to watch the moves in the Aussie after the RBA rate cut yesterday. Expected there. What do you make of the fact that it just can't break through that 90 US cent region?
Yeah, absolutely. Of course, that 90-cent level is going to be a key psychological barrier for a lot of traders out there, and I think a lot of them were still looking to sell into strength, particularly as it tests that 90-cent level. So it seems like there's a lot of skepticism about pushing it higher, particularly with a lot of event risk still to come later this week. Of course, tomorrow we've got the jobs data. We've got China set to hit the wires as well with their trade balance numbers, and of course later in the week we've got the statement of monetary policy from the RBA, and this might actually shed a bit more light as to exactly where the RBA is positioned and how they look, how they are feeling about potentially another cut, which the market has been sort of pricing in. So that's probably where the skepticism is coming in. And of course yesterday's statement was fairly brief. They didn't give much away at all, and some suspect that this is to do with the timing of the election. So possibly the Friday statement might give a bit more detail and shed a bit more color as to what to expect. Now, of course, we're currently at just within striking distance of that 90-cent level. We still feel selling into strength or on the rallies in the Aussie dollar is probably the best strategy out there. So we're not going to rule out the fact that we will start to see it being sold off again and drop back into 89 and below in the short term. But of course today we also have construction data and home loans data. This might cause a little bit of volatility, but of course the market seems very timid at the moment, relatively sidelined. There's a lot of consolidation across the board with limited moves for the risk space. So of course we do feel we might see some consolidation until tomorrow and Friday, when we start seeing a little bit more event risk hitting the market again.
The US dollar weaker overnight there. What did you make of the moves and the data that we saw and the talk coming from Fed officials, particularly the Dove, Charles Evans?
Yeah, there's a lot of contradictory sort of moves for the US dollar. I think with trade balance showing a narrower trade deficit than expected, along with some fairly hawkish comments from Fed member Charles Evans, and of course Lockhart as well, who was on the wires. They both alluded to the fact that tapering was indeed on the way. Of course, Charles Evans is a traditional Dove, and he actually came out and said, look, he won't rule out September tapering, whilst at the same time Lockhart said, yeah, tapering is probably on the cards and will probably occur at the remaining meetings this year. So that probably will continue to keep investors guessing, so to speak, about quantitative easing tapering. But we do feel this should have pushed the US dollar a little bit higher. But this wasn't the case, really. The market looks like it's in just that state of confusion. And of course, investors think with a lot of asset classes at those sort of highs, it's probably best to just taper back a little bit on their positions and just watch how things play out over the next few weeks before starting to commit to fresh positions. There was also some modest profit taking, particularly in equities, so it certainly looks like there's a little bit of mixed trading across the board. But of course with the US dollar, it does look like we will continue to reprice those QE expectations, and the asset that actually had the biggest effect, so to speak, from this US dollar weakness was the dollar yen, which actually dropped quite significantly. I think it's below at 98 yet again, and that will affect the Nikkei when it opens today. We're calling it down 1.5%. So that US dollar weakness is certainly not good for Japanese equities, and they'll be experiencing a lot of positioning as well, just ahead of tomorrow's current account numbers. And of course they've got the BOJ as well tomorrow, so we'll probably see a lot of positioning in the Nikkei. It will probably test that 14,000 level, and we'll have to see if investors have enough resolve to continue buying up the Nikkei in the short term.
So given all of that, what's your opening call for the ASX 200?
We're actually calling it lower at the moment. I think we will open below that 5100 level, possibly around 5080. So that's down about 0.4% from yesterday. It does look like the risk space, particularly the resource names, will enjoy a bit of a sell-off at the open. BHP's ADR is pointing to a fall of over 1% today, while gold dropped below that 1300 level, and this should affect or impact the gold names in the short term. So that will be a quite tough day for the mining names. We do have, of course, some reports continuing to hit the wires. We've got 21st Century Fox today. We also have Flexi Group reporting a bit later today, and we'll see a bit of a reaction to their earnings today. Yesterday we had, of course, Downer and Cochlear. They had some pretty contradictory or contrasting reports, with Cochlear quite negative, Downer was quite positive. So we'll probably see some of the analysts starting to come out with their latest recommendations on the stocks. And of course, the banks, 3 of the 4 banks have already passed on their rate cuts. So this should put in a lot of investors and homeowners in good spirits heading into today's session, and possibly this might start to have a bit of an impact on some of the interest rate sensitive sectors going forward.
All right, thanks so much for that, Stan.
Cheers, Brady.
Stan Shamu there from IG. All right, let's just turn back to that session on Wall Street and get an update on what happened. A little earlier we spoke to CNN's Zain Asher.